So
Awesome. Thank you everyone. Tonight is June 19th, Juneteenth on Wednesday, 8:30 Eastern. Um, and we have special guest Michael Guthrie with us tonight that is gonna be sharing investing tips, sharing all sorts of knowledge, and get your notepads ready and let's uh let's hear what Mike has to say. Thank you, Mike.
excuse me. Thank you so much for having me. Lev, invited me to come on, meet with you guys, and discuss a little bit about who I am, what I've done, and where we've been. So I'll just start out. I was in the service a long time ago. I got out of the Army back in the late 90s, started a ATM processing company. In like 1997. We operated that through May of last year. Had an exit. We sold a little over contracts on a little over 8,500 ATM machines that were deployed across the United States through a bunch of other folks. And during that time, probably the last 4 years of operating that company, we started investing in multifamily real estate. Before then, we had only been investing in single families. We had about 7 single family rentals that we owned and operated. We had hired out a management company because that really wasn't my my forte. Managing properties, not what gets me going. It's more the chase of the buying the property and getting it under contract and then getting it rented. I really appreciate doing those sort of things. And then our company was really making a lot of money, and we were paying almost 7 figures in income tax to the federal government. And that's when we found multifamily. We decided it was a good opportunity for us, me and my wife having a small company, to take me off of payroll, turn my title into a real estate professional so that we could take advantage of the depreciation benefits you get with owning income producing property. So we did that. I haven't paid income tax legally for the last 4 years. I will pay some for 2023 because we did have an exit, made a little bit more money than we could shelter. So that's where we are today. We own about 2,400 doors as general partners. I raised most of the capital on those opportunities. We own a little over 6,800 or 6,400 more doors as a limited partner. So we're a little over 8,800 doors in total in the multifamily space. In 2023, during the end of COVID, we started buying triple net properties. We own a Starbucks. You can see a little one right there, right behind me. It was a gift from a friend when we closed on our very first one. And then we bought another property. The Starbucks we paid all cash for. The property and the building cost us a little over $2.5 million. We brought in, I think, 5 investors on that property, paid 100% cash for that, bought it at like a 4.8 cap. So we're making about 4.8% on our cash. But as soon as the first 5 years are up and Starbucks signs a 20-year lease, every 5 years that lease goes up 10%. So as soon as we get to our first 5 year mark, we'll look to exit that property. And then we also bought another one called TLE, or the Learning Experience. Bought that for a little over $6.5 million. Again, nobody knows what TLE is. If anybody does, just raise their hand or throw it in the chat. It's called the Learning Experience. They have about 400 and some odd stores across the United States. They teach kids schooling in a very proficient and accelerated way. And so their training center is located in South Lake, Texas, and that's the building we own and that we purchased on their behalf, and they rent from us. They signed a 20-year note or 20-year lease also with 10% every 5 year increases. So we'll look to exit that in the next 4.5 years, or the next 5.5, or 3.5 years, excuse me. I'm doing the math the wrong direction. So those cash flowed day one. The TLE's paying a little over 6.5%. That one took about 2 months to raise $6.5 million, where the Starbucks took about 40 minutes. The only reason I think Starbucks went a little quicker is it's sexy. Who doesn't want to own a Starbucks? Anybody been to a Starbucks? You'd like to own that because that corner is typically fairly busy. There's a gentleman driving his car. He's drinking his coffee right now. So it's something that everybody knows, even though it pays a lot less, everybody knows what it is, who they are, and that they're stable and coffee's not going away. So that's how we got into the triple net leasing side. We're about ready to start raising on our second Starbucks, probably the next 30 days, buying another one in Nebraska at this point in time. So be doing that here soon. What else have we done? We do some top line lending. It's like a royalty deal, if you will. We take 4%. We gave this company, they wanted to borrow some money, so we're like, sure, we'll do that. And we take 4%, or I think it's 4 or 5% of their top line revenue, because I don't want to go on what their net revenue is, because then it gives somebody a chance to monkey with the numbers. So we go out whatever your gross is, we take a percentage of the gross until we 2x our money, and then we get a 5% kicker on the back end when they sell. So another great way to park your money with an established business. And we also have that one secured by their building that they own outright. So we try to secure everything the best we can. That way, if the business goes south, at least they still have a piece of an asset or a piece of real estate that we can come back and get. We do some hard money, short-term lending. That's a little more lucrative, but it's a little more risky. We get do loans from anywhere from 1 to. I'm gonna mute.
1 sec, sorry, I'm trying to find Eric. Eric,
It's Eric.
Eric, can you mute that?
thank
Alrighty,
you,
we're
Eric.
back. We're
We're
back.
back.
Thanks, Eric. Appreciate it.
Sorry.
Happy to have you here. We also do some hard money lending, anywhere from 100 to 500, $600,000, but we're getting a point or two on the front end of that, and then we're charging them 2 to 4% monthly. So say you have a 4% note on a $500,000 loan, you're getting a $20,000 a month payday. It's like a 48% annualized return, but typically those folks will only keep that money 3 to 6 months, and they do that more in the fix and flip space, depending on what they're trying to do and how quickly they can get in and out of a project. So those are some of the things that we've been doing to diversify. I don't have any money in the stock market anymore. I don't trust it. Well, let me rephrase. I don't appreciate the way it can fluctuate based on somebody's opinion. That you don't get to do a whole lot of due diligence on the folks you're buying into. There's not a whole, and typically the broker or the app or whatever you're trading through is making a 2 to 3 point spread or some sort of a spread every time you're in or out of a product. So I don't like the stock market. So back to multifamily, and I bought into a fund that owns 27 trailer parks. Bought into that last year. That's paying out a nice little monthly return. I also bought into another triple net lease. It's called Cameron Net Lease. We bought, I want to say 62 quick service gas stations / restaurants. Most of them are Circle K's or come and goes all across the United States. And that's paying out right now at about a 6% monthly return. So got a lot of money spread out through a lot of different assets. We also raised money for multifamily. That's how we got our start in this business. Let me rephrase. I was putting money into properties as a limited partner. We're putting in significant amounts of money into deals that we got asked to come in and raise, because this lady that wanted me to raise, she's like, if you're putting this kind of money into deals, you probably are running around with people that have that kind of money to deploy. Why don't you see if they have an appetite for putting some money into multifamily? And over the last 2 years, we've raised a little over $88 million for multifamily assets. So their first year we were in, we raised over 60 some odd million in the first 12 months. Didn't do a whole lot in 2023 other than a couple triple nets. And we just finished a deal in San Antonio that we closed on in April. It was a $6.5 million raise that took about 2 months to do. Raising money right now is not the easiest thing in the world. And if anybody has a secret that I'm missing, or they have a group that's got more cash than they know what to do with, I'm happy to sit down and talk to them, because there's always deals, but there's not always a ton of money, at least not today. In 2022, people couldn't get their money out of their wallets quick enough. And we'd fund a deal in 7-8 hours on a $6 to $10 million raise. And people would be like, I want in. And I'm like, well, we're full. And I go, you got to be ready when it's time, when it's go time, it's go time. So not to be mean or anything about it. It's just, you don't want to over raise on a property, because all of a sudden it just starts to dilute your returns to your investors as you start to operate the project. So I've said quite a lot. I'm semi-retired. This is all I do. All I do is raise capital and try and have conversations with people and help people move their product along. I think the one thing we need to remember when we're out trying to do deals, raise money, or do whatever, you can't finish what you don't start. If you don't start nurturing your database, don't start working your investors, it's going to be harder and harder to get them to bring in money. Like if I had to do a capital call tomorrow, it would be a bear, because I haven't been nurturing that group on that property that something might be coming. So nobody likes surprises. Nobody likes to wake up in the morning and go, I need to write a check for 50 grand or 10 grand or whatever it might be. So anytime you're looking to raise money or buy a property, before you even go and get one under contract, start nurturing your audience, start bringing them into your fold, start letting them know there's something more coming. Because the last thing you want is a phone call like last night saying, hey, I need somebody to speak tomorrow.
I think that was earlier today. I think that was like 4 hours ago, Mike.
The good news is I don't have a dinner reservation for not too much longer. I have a date with a gentleman. His name's Kevin Owens. He's a big lender with Bercadia, and he's doing 2 refinances for me right now. One's a $15.5 million deal he's refinancing, and the other one's a $22 million deal. So when he invited me to dinner, I figured if I can get his ear, it's worth me actually changing. This morning I was in my workout gear, and I was in workout gear till probably 45 minutes ago, because that's how I show up to my desk, because there's no point in getting all fancy and dressed up if you're not going outside the house. So I like to keep it casual, but keep it real, but keep busy. Not busy in the fact of just having something to do, but busy in the fact that I'm being productive.
That's awesome, Michael. I thank you so much for dropping all that information. And should we start asking questions? I know I have a bunch of questions.
I say if you have questions, let's bring them.
Bring it on.
I'm happy to. I am here to serve, and that's the purpose of me being here tonight. And if there's anything I can answer to help anybody on this call, that's why we're here.
Yeah, awesome. Well, thank you very much. So I have a couple quick questions that I just want to ask you real quick, and then we'll get to Donna, and I know Lev, Danny, and the other folks in the room. So the first one that I have, kind of 2-part. When, where, and how did you kind of learn the whole game of syndication?
When September, I want to say 2020, my wife was watching a Zoomer. I was actually in my warehouse putting together some ATMs for a fair that we had that had gotten canceled. So I was out actually cleaning up my warehouse, because it was during COVID. So that's when it was September 2020. My wife had watched a webinar and learned a lot about it. And when I got home, she's like, I figured it out. We found where we have to start parking some money to avoid taxes. So she figured it out. And then we joined the group where she figured it out from. and I started learning from all of their best people. And I joined their highest mastermind right out of the gate. I figured if
Yeah.
I'm going to learn this, I want to learn it from the best people that are doing deals on a regular basis. And so if I'm going to park my money, I want to be parking my money with those kind of people, and I want to be learning from those people.
I love it. I love it. I had that same mindset a couple of years ago that kind of got me into all this syndication. And then so before that, prior to that, were you doing deals just you and your wife, or were you doing like joint ventures, kind of teaming up with other partners as well?
Before we got into the multifamily space, we had 0 partners. We didn't have a partner in our ATM business. My only partner was my wife.
Yeah. Okay.
And so we bought single family homes by ourselves, and then we would turn them over to a property management company. And we bought more because you didn't get a discount on your monthly percentage that you had to pay them until you got to a certain, until I got to over 6. So that I went
Yeah.
from 10% to 6% by getting over 6 units. So for me, it was a rush to get to 6 units and get some money deployed so I could actually save money on the rental side.
Gotcha. And then so a rule of thumb for paying all cash for a property and buying it totally outright, or going financing and doing, down payment financing. Do you have a rule of thumb for that, or is it
On
just
the
high interest rates?
Good, that's a great question. I've never not had a bank as a partner on a deal until we did the 2 triple nets. And the
Yeah.
triple nets were inexpensive enough that we could buy them without placing debt on them. And that was when interest rates were just skyrocketing and nobody knew where the end was coming. So we decided, as the lady that brought me the deal came to me and she said, "This is what I'm thinking. What do you think?" And I go, "Absolutely. If we can start returning cash to people day one," I go, "I don't think we're gonna have a problem raising the money on these deals." And it took us like 45 minutes to raise $2.5 million for the first Starbucks. The TLE took a little bit longer, and literally at the end, I loaned the company the last 600, because we had to close. I loaned the company the last $600,000 to close while we finished raising that 600 grand. So I waited an additional 2 months to get my money back, but we sort of loaned it to the company, and the company paid me a little bit of interest for that opportunity. But it's paying a 6.6% cash on cash return annualized today because we paid all
That's
cash. If
great.
we'd have taken a note, we'd be getting about a 3% return.
That's incredible. That gave me a good idea. So thank you.
That's why we're here. If you can pick up
Right?
one nugget from any conversation it is not a waste of your time. It's actually a good use of your time.
100%. Thank you very much, Michael. Donna has her hand raised.
Hi, Michael. So the question I have is around your choice of Starbucks. I know they have a specific clientele, but do you think that there's going to be challenges in this market with the high inflation and people going to Starbucks? Like, how did you evaluate that it was still a good deal?
Starbucks signs a Starbucks corporate, because you cannot own your own franchise of Starbucks. Starbucks corporate actually signs a 20-year lease guaranteed corporately. So unless corporate goes bankrupt, you're always going to get paid. There's smaller places or smaller companies you can actually go and buy triple nets and buy the building that they're in, but they could more likely not succeed. Starbucks has a pretty good track record, and unless their corporate goes bankrupt, they're going to lease that building for 20 years.
That's great.
Yeah, that is great. Thank you.
And I'm not worried about the high-end coffee. I only drink Starbucks coffee when I travel. Other than that, I make coffee at home. But you see so many. I was just in Washington, D.C. 2 weeks ago in down by the wharf, and you see people from all walks of life coming in, spending $3, $4, $5, $6 a cup of coffee and you know they can't really afford it. So people will drink coffee regardless of whether they have the means or don't have the means.
Then it sounds like a smart decision. Good luck.
I feel it is, but you have to weigh that out with your investment criteria.
Absolutely.
Very true. Cody?
Of course. Hi, Cody.
Hey guys. Hey Mike. Always good seeing you, buddy. Hey, I got a quick question. So I'm going to start a real estate group here with some bankers who know some high net worth people to start pushing deals. Now I'm not going to know any of them off the top, at least not most of them. So it sounds like I'm going to have to open up an LLC with the guy who knows them past 30 days. That LLC will then go into a fund and do an SPV fund. Uh-oh, it's right. And do a fund of funds for deals. And I was just curious if there is potholes and sinkholes that I need to avoid while going down this path.
It's an interesting path. If I was starting a real estate group, I would probably start getting people together and start trying to really understand what they're looking for, what their problems are, before I went out and started a LLC that I don't know, or an SPV that I'm not sure I'm going to need. What if you guys just came together as one group of people and you all were JVs together, and then you as a group came together all equally, depending on the amount of money you put into this opportunity, and then you go and buy a building yourself? Or if you want to go the SPV route, where you're going to take that lump of cash and invest in somebody else's opportunity as a fund of funds kind of a deal. Sinkholes are, if you start your SPV today and you meet all these folks from this banker, when they start putting money into this SPV and you don't have a opportunity to go invest that, they're going to start expecting a return on that capital that they've separated from themselves, probably sooner than the deal you're going to invest in is going to be returning cash. Does that make sense? So I always like to figure out what the problems are that people are having and what they're looking for, and then bring them the solution. I don't want to come to them with a solution that they don't know they have the problem yet.
Understand. From what I'm understanding, the majority of the problem is they have money, but they don't have deals because they're looking for deals in the local area, and we bring them deals outside of the local area.
Then I would get together and start showing them those kind of deals and telling them to get into those deals. You invest into this SPV that invests in that deal, and then give them the economics on how that's going to work for them on a deal by deal basis. But it sounds like you're probably going to do an individual SPV or special purpose vehicle or a fund of funds. If anybody doesn't understand what that means, it's on the call, that goes and invests in the deal. It's like a separate syndicator bringing like me as, like, say you had a deal and you go, I need to raise $4 million. You already have 3, you need 1 more. And you go, okay, Mike Guthrie will write you a check, but Mike wants a piece of the GP to finish that deal out. That I would be my own. I'm not coming in as a special vehicle. I'm coming in as my own company, investing sort of side by side with you and taking a part of the ownership. So
And that sounds like a great question. Thank you for clarifying that already. I didn't even think about that. If somebody's coming in as a pure LP, here, take my money and give me double my money in 5 years, that's one thing. But if they want a GP access, they can't go through the SPV, correct?
unless you make them a GP on your SPV, you make them a manager.
Gotcha.
And I don't do a whole lot of, I've never done an SPV and I've never done a fund of funds. So please check with your attorneys and counsel regarding those, because I don't want to say something that's inaccurate. I've only ever been a GP on a property and we've raised for that specific asset.
Gotcha. Thanks for the insight, Mike.
Absolutely. Anytime. Appreciate you, Cody.
Thanks, Cody. any other questions?
I've got a quick question.
Go for it.
So Mike, you've been in this, doing, what'd you say, September of 2020. You've been in it about a year longer than I have, and you've raised a ton of money, by the way. So are there certain groups that you've joined that have produced a lot more of your raising funds, or that you're like, hey, I go to this group every week, or like a local meetup? I mean, there's got to be some sauce there. That's tens of millions of dollars you've raised in what, 4 years? A lot.
We didn't raise really anything in 2023 because there was really no deals.
Right.
I was being interviewed today on the Best Ever Real Estate podcast by this gentleman named Ash Patel. He works with Joe Fairless, and he asked me the exact same question: where do I go to find investors? My current list, 99% of my current investor list came from people I've met over the last 28 years in business, whether they were in the ATM space. I was in the medical space as an x-ray tech before I got in the ATM business. And then it was friends and neighbors and family. And I always say family. No family member of mine's ever invested in a deal that I'm in. But where do I go today? This might surprise you. I don't go to your local real estate meetups. If I do, I'm typically speaking at them or sharing information at them, because everybody at those meetups is doing the exact same thing you're doing. So say you and I were at a real estate meetup and we met and we had a great connection. Unless you and I are doing a deal together, I'm probably not gonna put money in your deal, and you're probably not gonna put money in mine. So where would I go? Physician meetups, attorney meetups, CPA meetups, anything that's outside. Google investor meetups. People have investor groups that you can meet up. You can buy lists of high net worth individuals and send them mailers and then create your own meetup. There's another gentleman, he does this thing, he calls it dinner tables, dinner excursions. He will fill a room with 75, 80 people, 6 people at a table, little white cards in the middle of the table, and he'll go, give me the 3 main things you invest in on one side, and the 3 main pain points you have in investing on the other. And then as a group, that one table becomes its own little mastermind. And then you have somebody at the table go, give me your best one. And all the tables, everybody gives the best one. And you start talking about this. And he goes, if you want to learn more about investing in the things we're doing, sign up with my program. There's a no fee program. Just sign up and I will send you information regarding investments and the investment kind of things that we're doing. And all of a sudden you have a whole new group of investors. Yeah, it's going to cost you a couple $1,000s to throw a dinner party at a restaurant or something. But if you pull out, and people don't understand what the value of one investor is. The average investor in my pool invested about $280,000 across my 12 projects. That's the average. So we have $1 million investors, and my lowest has been a $75,000 investor. So we have some fairly well-heeled folks in our corral, if you will. The value of one $100,000 investor, you take that 100 grand and you go, okay, we're raising $6 million. That's 1/60th of what we've raised. So 1/60th of what I would make as a GP. So on that $20 million property we bought, that $100,000 person put in, I would make on average $43,000 off of that $100,000 investment as a general partner on the exit, based on the percentage I'm getting from the GP split. So what would you spend to have one $100,000 investor that could create a $40,000 income for you in 3 to 5 years? So people don't normally break it back down that far. But I had a coach I spent a lot of money with, and we actually dug into each investor and figured out exactly what the value of that investor is, so that I would know what it would be worth for me to spend to go out and find more people just like them. And I've yet to spend any money doing that. But there's value there, that there's value in doing it. Not that we're not getting ready to do something like that, but I'm getting ready to go out of the country for about 45 days. So I'm not pushing right now, but come September, October, I'm going to start pushing more of the dinner table stuff. Cause I know coming into next year, there's going to be so much blood in the streets. I'm already starting to see a little bit of trickle in properties. So there's going to be a lot of opportunity. So you want to make sure you stack the deck in your favor. So when the opportunity shows up, you go, hey, Lev, I know you're buying that $10 million property. I can bring you $3 million. I want 40% of your GP. But I'm going to bring you 3 million of the 6 that you're raising. I'm going to bring you 50%. And all of a sudden now you can put together a partnership because you know what you can bring to the table in the form of cash. Because I know one thing's for certain. There's no deals out there that don't get done, they don't get completed without cash.
Awesome. That was great. Thank you.
That was awesome.
Mike, I got a question for you. Well, kind of a two-part question. So what is your deal criteria? Obviously, you've got quite a diversification there, but what's your deal criteria? And then also the second part is, what is your like how do you choose who to invest with? Right? How do you know if you're going to invest with somebody or not? What's the requirement before you go and invest with somebody?
The answer to that question's pretty close to the same. You better want to have them over to your house for a barbecue and have my ex-banker, my ex-private banker, when I first met him, I was golfing with him. I bought a golfing deal at an auction so I could go golf on a private country club golf course because I'd never done that. So me and my wife are golfing with this guy, and I'm talking to him, well, how do you become one of your clients at the private banking side? And what does that mean to be a private banking client? And blah, 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 blah. And he goes, they have to pass the barbecue test. And I go, well, what's that mean? And he goes, well, I have to be okay having you over to my house for a barbecue. So when I invest with somebody, I want to invest with somebody I know and I trust, and I think their business acumen is right for the product we're getting into. And it's the same with the general partnership. The people come first. For me, the deal comes second. And if you pull your own investors that have invested with you in a opportunity, I would almost guarantee you 80 to 90% of them will tell you they invested in that deal because of you, not because of the deal. You could hand them this 400-page PPM and 98% of them are never going to read it. They're trusting you as the lead on this project, have done the due diligence, have done the work, have vetted out the other players, have vetted out the loan, vetted out the property, and you're bringing them this opportunity on a platter. So 99% of my choice, and I'm very limited in who I do it, even though I like a lot of people, very, very limited. It's about the people first, product second.
That's good. Yeah. That's I was hoping for the whole triangle. You touch on all points, but it's the know, like, and trust. Right.
Well, yeah.
Yeah.
I'm not going to do that one. I'm going to keep it clean here.
Okay.
But if you remember what Hua was saying this morning on the capital raising mastermind we're both in, you can feel somebody when they're speaking to you, and you know they're actually concerned about you, and it's not about them, it's about them feeling you. And if you can get that across to somebody that their concerns are more important in this opportunity than your concerns, they're going to feel that, and they're going to want to bring you more investors or more money, or maybe even their friends, because they're trusting that you are wanting to do the right thing by them. That makes sense? All right.
Absolutely.
Anybody else?
It looks like Sharam's got his hand up.
Good evening. You have to unmute.
Yeah. Hi. Hi. How are you, Michael? Very
Good.
nice.
How are you,
Very
sir?
nice. Thank you very much. Okay. Thank you. I'm a dentist actually. It's interesting that you used to be in the medical field and now you kind of veered off to something completely different. But Michael, I need to ask you this question because this has been basically bugging me for the longest of time now, especially since March, February, March of this year. I see a lot of changes. I'm here in Pasadena, California, so there are things there is a changes in our geopolitical landscape that is like kind of things that are above and beyond our hands. We really cannot sort of play much into these games that they are playing. How do you see, as a person who is sort of more connected, more involved? You obviously read you read a lot of papers, I'm assuming. I kind of I deal with your everyday people, when they have health issues and stuff as such. But that I hear them out, and I kind of it's sort of it brings that level of it has sort of boiled up this level of uncertainty in me that I'm like, I'm not feeling sort of I don't know if it is a it's not like 10 years ago. It's not like 7 years ago. Things are really kind of, becoming, I don't know how much you study or read the international news and, other news agencies, what's going on around us. We are sort of sitting in a little bubble, and all these sort of, big players, smaller players, they're all sort of, coming up with these very precarious kind of games that is sort of making I was actually, to be honest with you, last night I was like looking to get myself a generator. I was like, I gotta go find myself a generator. Maybe we're gonna lose electricity. What is your sort of word of wisdom regarding people who are sort of guys like me?
I say if you want certainty, make sure you get the generator, because then for certain, if they cut your power, you can actually put the power back on. That's number one. Number two, in investing, the only people that don't make any money in investments are the ones that never dip their toe in the water. So we're all going to have to take a risk at some point, or we're going to leave our money at Bank of America making 1/10 of 1% when inflation's truly not running at 2%, like they say. It's probably running closer to 4 to 5, or maybe even higher. And so what happens is, say you have 100 grand and inflation's running at 5%, and you're making 1/10 of 1%, every year that 100 grand goes down a value of $5,000. It doesn't have the buying power it does today. The one thing that's certain, though, when you put money into real estate tends to follow inflation. So it tends to go up at the same rate or even higher than inflation. So I know for sure. And my wife's a little bit of a skeptic too. And I'm not saying that you're a skeptic, but she wants to be cautious, but she also knows that if we don't do anything, we're only going to continue to get what we already have. So do we want more or do we want less? And there's a ton of dental groups and dentists that have actually left the dental profession. If you Google dentists for multifamily, there's probably 50 of them across the United States where dentists just like you went to a mastermind and joined a group and listened to how to buy and sell these kind of opportunities and how to bring them to other people in your field, because you have a niche that none of us have, unless there's other dentists on here, where you have an audience of people that will listen to you because you're a dentist. And you can actually bring other dentists into your fold, and you can invest together as a group and have a little bit of buying power. People do it all the time. There's another one out there, another group out there called white coat investors. The one guy was an emergency physician, and his buddy was the carpenter on his house. He was the handyman, and they came up together, and now they have this huge group and this huge following, and they've probably got a couple $100 million of assets under management just by themselves, one physician and his contractor. So you have to do something, and if you trust the stock market, I say trust the stock market, but you're going to trust somebody doing something with your money, unless you just want to continue to stockpile it. And
How-
all I know is when we stockpile, it goes down in value.
Thank you for a very detailed answer. How do you see these medical? Because I've been looking at these medical facilities, like you know the build, you know, because I know those are like kind of, you know, tough cookies to find. You know, you have to really go and sort of, you know, look in the certain market area, certain cities, find a nice place. Do you see these as a, you know, because you were, I kind of hopped in a little bit late. You were just talking about the Starbucks. I believe you mentioned
Mhm.
something Starbucks. I didn't get the whole sort of, you know,
Mhm.
story behind it. But do you find these kind of businesses, or have you ever sort of looked into these kind of businesses as a, you know, as a real estate investment to kind of, you know, have a being investing in a property that it is a medical facility of, you know,
There-
with multi-tenant, or, you know, single tenant.
I have some friends out there that actually own surgery centers.
Mhm.
They actually own full medical buildings that's got 10 to 20 different positions in there. And they tend to buy these close to the hospitals because anybody that operates tends to have an
Yeah, yeah.
office. They want it close to the facility. So I think those are great opportunities. I'm actually being pitched by a gentleman. He'll be back from Lebanon in about a week. That's where his wife's from. So he's over there visiting right now. And he wants me to raise capital on his medical facilities. He's pitching me to do that with him. And he's had some great success doing it with his own money, but now he wants to go bigger. Because the one thing, and it's funny that he wants to go bigger now. The one thing I've found is when you get started, we all want to start small. And then we'll start to expand. And then we're like, oh, sorry about that. And then it goes bigger, bigger, bigger. And everybody wants to go bigger, faster. And the problem is you should step out and go where you're a little bit more uncomfortable out of the gate. And I think owning medical facilities is a great opportunity because one thing's for certain, I can't Zoom a shot of penicillin to you. I cannot give you Novocaine through the Zoom. So we're going to have to meet up in person at some point or another. And it's probably not going to be at my house or yours. It's probably going to be at a medical facility. So I think medical facilities are always going to be around. The same way a lot of other things like housing and medical facilities are always going to have a place.
Right. Thank you very much,
Absolutely.
Michael.
You
It was
betcha,
nice
anytime.
talking to you. Yeah, it's very
It's a
interesting.
pleasure.
Thank you.
Appreciate
so
it.
much.
Thank you.
You bet.
Sure. Thank you. You can mute me now.
I don't have the controls.
Thank you, Michael. I'm gonna stop the recording. So thank you everyone for watching this.